Good day. It's Tuesday, May the 11th. I'm Martin Gagel with Radius Research. Today, we're joined by John Proctor, CEO, and Erin Crowe, CFO of Martello Technologies. Martello provides digital experience monitoring solutions for Microsoft 365 users and Mitel digital voice solutions. Thanks, everyone, for joining us today. Now we will enter the Q&A part of the presentation, the deep dive. John and Erin, I'd like to start with your acquisition of GSX is less than a year old. It was announced, or the close was at near the end of May last year, so we're not even 1 year into it. And then in January, you announced you had finished the integration. Maybe over this year, investors were a little disappointed that the growth, the organic growth coming out of GSX, and I'm guessing here, wasn't as high. But as well, looks like you were doing some integration stuff. Could you just talk about that path of integration, what you all had to get done, and now that it's integrated, what does that mean for your business development and trying to drive the subscriber growth?
Yeah, I'll start, and then I'll sort of hand it over to Erin because she was key in the integration. So obviously one of the biggest challenge we've had is we've been doing integration during a pandemic, where we'd normally get on a plane and go and sit and meet people and spend time in in-person town halls. Now with an office in Geneva and a team in Nice, these people we haven't met in person at all. So it has certainly been far from easy. And everything from integrating onto the same HR system, pay system, Salesforce system, et cetera, and it's yet another legal entity for the finance team to enjoy and love. So again, there are some unique challenges with any integration, but a lot of it was, again, getting the R&D crews into the same sprint cycle, getting the sales team aligned so we could start cross-selling. And we just did our sales kickoff for this financial year, and for the first time, effectively brought the whole sales team together. Much as they've been in meetings, together, this time was 3 days of intense sales kickoff, value proposition work, training, education across the board, product roadmaps, etc. So a lot of work going on. And then what we do to sort of close out is we do a survey, and I haven't actually got the results yet because it's just about to close down. But we survey everybody, the company we acquired and people already with the company, because we want to know what did we do well and what didn't we do so well. And we did this with Civision, and we learned a lot. And the nice thing was the person running integration this time, a lady called Denise, had come from Civision, so she'd gone through integration into Martello. She'd seen us warts and all doing integration, and she did a really fabulous job in pulling this together and managing the program. Erin, anything to add onto that?
Yeah, I mean, I think from an integration perspective, I think one of the really key pieces when we look at sort of the accomplishments through that period, and John talked about it a little bit earlier around taking some of the knowledge we have gained from our MPA product, our Mitel product, and applying it to GSX to allow them to scale, right? So that some of that work that was done over the past year through the integration process and now having that ready to launch as Vantage DX, this integrated product, I think is really key when we look and think about the overall integration activities, right? As far as, outputs and really enabling us to drive the product now through an indirect channel strategy and start driving that growth that we see, right? That we know that the Microsoft space is growing. We've now got the product to a point where, we can drive it to through the SMB channels, and that will really help us scale as we go forward too.
All right. I'd like to switch over to the multi-tenant news release that you put out, and I want to you had your filing cabinet analogy there, and do I have it right where now if there is a reseller and they've got their pool of clients, they can then sort of install it in their sort of management system in their war room, or I don't know how they do that, but in part of their dashboards and all that. And then they can start selling it to their clients without having to do a whole new kind of fire up or spin it out of your side. And then they can are they the ones that actually managing like company A's network, and someone says, oh, something's going on there, and then company B, so the same dashboard, I can look at 20 different clients or that, and I guess what I'm leading to, when this isn't just a product with a cool feature, then you can actually leverage the whole reseller channel and all of that. So does this actually create all sorts of new business opportunities?
Yes, I mean, you've described it fairly well. I mean, effectively what we do is for each partner, we create, a space. And I mean, people use the cloud like it's some ubiquitous. It means, we create some space in somebody's data center, right, on a server in somebody's data center somewhere, and say, client X, this is your space that you can now put your clients into. And they can then add their clients. And as they add clients, they pay us, royalties. And then they can monitor that space and say, I can see that this client has a problem, I will deal with it. Or when they call them because they're the help desk, I'll deal with it faster and quicker. That's pretty much how this works. But absolutely, which is once we have helped the partner create that space inside that server in somebody else's data center, that's our workload done. Right now, we just have to make sure we're billing them appropriately and manage them, bringing them new features, etc. So that's really sort of exactly how that works. And the intent is sort of, it's our one-to-many, right? I cannot sell to small, medium enterprise. Just there's too many of them. And I'll use things like, doctors' offices, lawyers' offices, around the US. I cannot scale down to that. But many of our partners do. That's their preferred target, is to sell a package to those guys. Having us installed means they just add a certain, add somewhere, between 5 and 10% of the cost, right, onto this for the client. Some of the clients might not even know. They've just been told they get the premium offering, which means X. However the partner wants to do this is up to them, whether they want to do it as a later upsell or the packaged offering. That'll be either option. But then it's pretty much hands off for us. It's their client. We will know who they are, but not necessarily have to interact with the client unless there are some significant problems they need help with.
Okay, and then that also then makes sense for with your part of the Microsoft sort of partner program, or I don't know if I just said the right term for that, but where then they can go to their resellers and, hey, you're selling a whole bunch of MS Office 365 subscriptions every year. Here's something else that you can sell with it. You can grab some more margin. You can add higher value service so you know that your clients are extra happy, so to speak.
Yep, exactly that. And if you've got a fairly saturated Office 365 market, what are you bringing them as new? What are you bringing them that's interesting? And the aim here is to, again, if I look at sort of the progression, evolution over the next couple of years, monitoring is interesting. Managing is better. Optimizing is really good. And this is where we see the path. This is the phases we see going through. And I don't think I certainly don't think all of our competition have got that sorted out. I mean, we've already hired our first data scientists. We've got 2 of them on board now to head us towards optimization, because we need the machine learning capability to go towards that optimization. We are already designed for that evolution, right? And because unless you're designed at the base level to do that, you'll never get to that optimization level towards the end. You have to have that goal in mind from the start.
So just to be, do I have this right? Currently, your system is a monitoring system. It sort of flags, hey, there's a problem here, and then they've got to fire up some other network optimization tools or whatever to then manage that. And then, so that could be down your path road, and then after there, then the optimization, as you talked about. So is that, in a very broad sense, your kind of product roadmap?
Yeah, in a very phased sort of approach. I mean, this is where we're looking at. We need to look at the horizon and say, where should we be in 2 years? Where do we truly bring value? And the more load you can take off an IT team by saying it will self-heal, it will self-optimize, the happier they're going to be. But you also need to give them that path. It's no good saying, well, we tell them this is what it does now. It does monitoring now, and they buy it. It's great. If they don't believe there's an evolution path to it, and you're saying buy this now because in 2 years it's going to do this, right? You'll lose them. And this is where, again, we find we can differentiate with the competition, is in having the baseline to say, we can see where this is going. And already there's new terms, digital experience optimization, user experience management. There's a whole bunch of different terms flowing around. So it's still a fairly new market. So much as we call it, as you said, DEM, that term was only coined last year. It's still an evolving market. And I think there will be some settling down in the future.
All right, I want to switch it over to you. You referred to your Mitel, your sort of your legacy, but it's not not your legacy, but your the Mitel product. And you're, do I get it right? You're creating one unified solution so that if you're a Mitel client, odds are there's a pretty good chance, just overall global statistics, they're also a Microsoft user. So that if you're giving them Mitel service, you can say, hey, we can also manage your Microsoft 365 solutions as well. And that's just one more, and yeah, and that's just one more service and higher value thing that they can add and maybe differentiate themselves from their competition.
Yeah, very much so. I mean, Mitel is still very dominant in that cloud unified communication space. So being able to say to all of those customers, yeah, like you said, the odds are pretty good that they're going to have Office 365 as well. Do you want to make your life simpler and put it on one picture? The answer is yes. Now, the other piece here is the partner network. Mitel is designed around having a partner network. Those partners are quite often the ones who offer Mitel as a service, right? It isn't Mitel, it's the partners who offer unified communications as a service. You know, whether it's inside a Google data center, Amazon, whatever it is, doesn't matter. We can pull all of that and the Office 365 together into one picture for those partners. And again, I come back to the point of saying, and when you troubleshoot and deal with it. And so, for example, think about Teams going into the healthcare environment, right? If Martin is lying on the slab and the surgeon is relying on Teams for a conversation about, you know, should he cut left or cut right, I'm pretty sure that you would want that Teams call to be really, really accurate. So again, our ability to be, you know, even inside something like a hospital environment to say which calls are absolutely critical, right? The 99.5% isn't enough. 99.9999% uptime, right, is essential for these. That's part of our solution, right? That's where we go. And, you know, I can tell you right now, that's exactly where Microsoft is pushing. They want to be the dominant unified communications player. And Microsoft is really good at being dominant. I'm sure there's a few people on the call who remember a thing called WordPerfect. Not anymore. Word crushed it. Microsoft Word crushed WordPerfect. And if you talk to a Microsoft sales guy at the moment, they're pushing Teams. And, you know, if you bought Office 365 and you're told, yeah, but it's not much more to add Teams, and that little bit more to add Teams is a lot less than it costs to pay for Zoom, which one are you going to go with? Because the moment the gap between Zoom and Teams is really closing in terms of capability. So I think it's going to be a really interesting space to watch.
Well, and I think as well with what a lot of people, I think I'm right here, let me know if I'm wrong, is one of the sort of strategic business advantages that Microsoft has is their, I would guess it's unparalleled massive partner network around the world where they don't just like Google sell it online and hope you click. They've got guys working phones and going into people's server rooms and pushing. They've got these just a huge network of resellers and support guys all over the place, and that you sort of leverage into that, right?
Yeah, I mean, you're right. Microsoft is a juggernaut, and I'm really happy that we're about to, you know, hitch the back of our small wagon to the back of the juggernaut.
All right, and it's really that multi-tenant piece that's really letting you hitch that ride right now. You really couldn't do it particularly effectively prior to that?
No, it's one of the earliest questions Microsoft asked is your solution multi-tenant? And now the answer is yes.
All right. Going back to Mitel, I don't really know much about Mitel. Are they, like everyone's Zoom and Teams on their phones and no one's in the office anymore? Is Mitel a sort of a legacy business that's just sort of declining and doesn't really have a roadmap out there? Or are they going to be sort of another Zoom type service, or do they have a growth path that you can sort of hitch a ride on with them? Or what should we kind of expect out of the Mitel world? Is it just a flat kind of business, or is there growth in there too?
Yeah, so I mean, Mitel have Zoom capabilities. And this is where, again, the unified communication space will be interesting to watch. Much as a lot of people are working from home, a lot of people are still, require black phones on the desk, right? I'm sitting here with my Martello phone next to me. If you go to a hospital, the phone's on the desk. If any of your, viewers are Major League Baseball fans, right? You see the guy pick up the phone in the dugout. That's a Martello phone. And actually they're our client, which is our analytics running underneath. Premier League soccer in the UK uses Martello phones. Volkswagen is one of Martello's biggest clients. Our analytics sit in there. So those are big enterprises. United Nations uses Martello. There's a whole bunch of things in here where people aren't necessarily suddenly getting rid of phones. So that what they're also more interested in is that integration, right? Make my life simpler. And Martello came out recently saying we have integrated with Teams. If you get a call on Teams, you can use your Martello phone to pick it up, and vice versa. And Martello already has video conferencing capabilities. So it will be a very interesting space to watch. And I think the ones that can become more business integrated, as in, make everybody's life simple, it's not just a standalone communication system, those are the ones to be more successful. And the nice thing for us we already bring that capability to Martello, saying we can already help you integrate with Teams. We're there already. It is a very positive relationship in that respect.
All right. Going away from the sort of technology business deployment, you raised some capital. So you've got gunpowder for M&A and whatnot. But I'm curious on your managing your growth. Like companies can especially SaaS companies, they can accelerate growth by just throwing lots of money and resources at sales and marketing and so forth. And it's kind of a lever that you can control. Are you planning on like running a big burn to grow as fast as possible, or trying to just kind of do it as break even, or grow with a little bit of cash flow on the cash flow line? What's your kind of strategy with on how hard to push the growth?
Yeah, so I think you've sort of encompassed the existential question for many tech companies at our stage of growth, right? Like how hard are you going to push that growth, and are you willing to create a lot of or cause a lot of burn to do it? So heading into COVID, we took a very conservative approach. We had a couple of quarters of positive adjusted EBITDA because there was a lot of uncertainty around sort of what was going to happen. I think, as we've seen the growth on the Microsoft 365 space, on Teams usage, we know right now that there is a very, very significant opportunity in front of us. So we really need to take advantage of that right now, because if we don't take advantage of it, somebody else will. That doesn't mean that we are going to grow irresponsibly, though. I mean, I think we did this raise in March. We have, we've given ourselves, as you said, some gunpowder for driving some of that growth this year. We've talked about the things we're going to focus on this year, which is really around enhancing the product more quickly than we could have otherwise, and driving the sales piece as well, right? Driving to the channel, the direct sales, really enhancing our sales team to make that happen. So we are going to put some money behind that this year and put some of those things in place, but and we've been transparent about that intention over this next year anyways. I think the other piece is M&A, and that's always the sort of question mark, I think, depending on what the size of the M&A target might be, like, what the multiples are, what type of target we're looking for. So that's the one where, we could potentially use some of the money that we raised for that or not. So.
Yeah, and I guess just on the M&A, and there are some questions on M&A here with like how much currency you can use out of your share price, given that you're it's probably not overvalued. But I guess going back when you did the GSX integration or the acquisition, you got a short-term line of credit from some, I forget which group, but you had you didn't have the money on your balance sheet immediately, but you had access to capital.
Yeah, so when we did the GSX acquisition, we did a combination of things, actually. We put in place a revolving facility, which was which is currently undrawn. So that's another source of capital that we have today. We also put in place a subordinated debt facility to fund the acquisition, and we did a raise at the same time to also help with funding the acquisition. So kind of put the pieces of the puzzle together to make that work. I think, do we think, yeah, our stock is undervalued today, and we would not want to, it would be an expensive endeavor if we were going to issue a bunch of shares to fund an acquisition tomorrow. But we certainly, we're putting a lot of effort right now into driving the sales growth as we go forward. We're not going to do an acquisition tomorrow. So, our focus is really on driving the growth, and the share price will follow. We're also looking at acquisitions where there's not an expectation on the multiple side that is unrealistic either, right? We want an acquisition to be accretive for us. It needs to make sense. It could be a small tech tuck-in, right? Which you may be doing in a different way than an acquisition that's going to actually have operating cash flow to add to our business. So there's different ways, I think, to skin that cat.
Going back to the growth side, you had growth on the GSX side or the Office 365 solution of it. I think from Q2 to Q3, that was 17% quarter-over-quarter growth, or did I get that number right, or kind of right?
Yeah, so in the Microsoft DEM space, which encompasses the Microsoft 365 product, as well as the IQ product, which is the analytics tool that sits on top of everything, that grew 17% between Q2 and Q3. And that's really the area where we see the most growth going forward, right? So as we add users onto our Microsoft 365 tool, that's the area where we're going to see the growth. And it's not going to be like a straight line growth, right? It's going to be driven by, as we bring on some larger direct clients, as we launch our indirect channel, we expect to see that those user counts start to grow from there. So different ways, but that's really the area where we expect to see the biggest growth going forward.
You've got the integrated product, now you've got the multi-tenant with these new distribution channels. So would it be fair to guess if, like, in an unintegrated product last year, now that you've got these new channels and so forth, should we expect, like, in that 15 to 20% quarter-over-quarter growth rate? Would that be reasonable? Or given that you've got these sort of other bullets in your product pipeline and distribution, that should one expect maybe higher growth than that 17% going forward here?
So I think it's important to remember that is, Q2 to Q3 was 17% growth on a portion of our business. We saw, Martello is a much more mature business. It's growing more around the single digits. It's not going to see the 20% growth we wouldn't expect going forward. And just given the stage that it's at, right, from a maturity perspective. And we've got some legacy pieces. So if you look at the business as a whole, clearly we see that there are significant opportunities in that Microsoft DEM space. The other pieces will not grow at that same sort of rapid pace. And I think it's also important to remember that, we are going to be launching our partner program this year and our channel strategy, but it takes time to onboard those customers too. So just trying to set realistic expectations as far as timing, right? And the time it takes to bring that revenue stream on board.
Yeah, and I didn't answer. I meant to ask, should we expect the Microsoft DEM to grow at that 15 to 20%? But I'm glad you answered my vague question, so you could kind of cover that stuff. But on you've got to ramp up the new distribution channels, but that on the Microsoft DEM side, 15 to 20% quarter over quarter would not, it's not a forecast, but that would not be unreasonable to sort of expect coming out of you guys?
Yeah, I think it's reasonable to expect that. And I think, again, as I said, it's not going to be like a straight line growth. We're going to see that some of those pieces, and it depends when, different deals come on board. I think particularly as we see the channel and the partner piece ramp up, it will be a much more steady, consistent growth quarter over quarter, right? Because the partners are coming on board, they're bringing on their customers, and it's a little, with the direct channel, it's a little more lumpy, as one would expect.
Yeah. Yeah, and that really opens up a whole new market for you because you just couldn't hit a single dentist's office before. Now one of your partners could.
100%. Yeah.
There's a good question here that I will read out now. Do most of your clients come looking for the product, or is it as the sales team responsible for kind of creating the demand and letting people know, hey, this is a problem, like we found a problem for us to solve?
So it's a mixture, and we pivoted hard because of COVID into a very digital campaign. So the marketing team, there's a lot of material out there we've got our YouTube channel, there's ebooks, you name it, to create that demand, right? So we've got marketing qualified leads or MQLs that come across the sales teams. The sales team working very closely with the marketing team to get that demand created. But yeah, we still get those odd ones, and it's kind of nice now. As I said, we've got the relationship with Gartner. We've had a few clients, large enterprise clients, in the last month or so sent from Gartner to us. So we're starting to see that, where we've got the reputation for being the solution that gets recommended by Gartner, which is nice. And even today, we had a Canadian energy company reach out of the blue because they've done their homework and said, yeah, we need something that's going to help with Office 365. We think you can help us. And they've just been sort of wandering around the web looking for that. And we created that, enough presence that we got found. So again, we see those pieces going. So a bit of a mix, but certainly at the moment, digital campaign. I think it's also worth noting this time is, a company our size, a lot of companies our size relied on the events, right? The Microsoft conferences, the technical events where you get into a whole, RSA conference or whatever, and there'd be potentially hundreds of clients and you'd meet a bunch of them in person, in set up times, etc. Well, we're not doing any of that. Nobody's traveling. So I'm very, very pleased with how well the team has pivoted to keep that pipeline going and keep new clients coming, despite the challenges of COVID.
Can we talk a bit about your competitors and what sort of state they are, what type of companies they are? They're direct, or are they part of bigger service offerings? Do you have, like, when you bid on a project, is it a direct sort of Martello versus XYZ company, or is it them just trying to figure out, do we want to have this on it, and there's not really a competitor per se? But just, what's the competitive landscape like?
Yeah, again, a bit of a mix, really. I mean, we talk about Mitel. There is no competitor there. We are the only analytics tool that, if you've got a Mitel phone system, we are the only analytics tool you can buy to go with it. But obviously in the Office 365 space, it's a bit more congested. And we do have some competitors in there. We do have some key differentiators. Synthetic transaction is one of them. New multi-tenancy is another one. There's a bunch of things where we just go deeper in Office 365. And some of them are big giants. We often get compared with Thousand Eyes. Thousand Eyes got bought by Cisco for $1 billion. We do see those guys. And sometimes if people want a much broader, network solution, they'll go with Thousand Eyes. If they want a much deeper Office 365 piece that can monitor 24/7, because of synthetic transactions, we don't actually need you to be awake. We can make sure your system is working without you. They'll go with us. So we find when it's a very specific Office 365 issue, troubleshooting, better performance piece, it tends to be us. So we can tend to overrun the competition there. A couple of other small players. But one of the things we do there, we talk about evolution, right? If we've got an R&D team approaching 50, which is good for a company our size, but that means we've got the depth to be able to say, and this is how the product's going to evolve. If you're a small 15-person company with an R&D team of 6, you can't say that with any straight face, right? It's not credible.
Is there any risk that Microsoft, because Office 365 is so important to them, that they embed some kind of a DEM solution into their Azure platform or into that service offering themselves?
Yeah, we often get that question, and the answer is not at the moment. I mean, there's a reason they want to bring us in as a managed partner, because they see how well we help. But the other thing is the way Microsoft is focused at the moment. Microsoft recognized that if they can create a partner ecosystem, that's R&D happening on their behalf. And that's great because it effectively becomes a multiplier in keeping people with Microsoft. The more you have people developing products around the Microsoft environment, the less Microsoft had to spend on R&D, the more options there are to create things. And that's really a push for them. And they actually the sales guys get better compensation for selling Microsoft partner offerings than they do a Microsoft offering. And that's a deliberate strategy by Microsoft to create that big partner ecosystem. So if you join a partner ecosystem and suddenly Microsoft create the same thing and become a competitor, nobody would do that. Nobody would invest in a product that would support Microsoft, knowing that Microsoft is likely to run over you themselves. So it's not in their interest to do that whatsoever.
All right. A couple of questions here that were emailed in, and they're more on the mechanics of the company. I'm not too sure. Someone's asking, apparently previously Erin alluded to a potential share consolidation, and then as well with the hot US markets, you're sort of a big little company. Any maybe in conjunction with the consolidation going up to TSX or down to NASDAQ, given how important the US is and Microsoft is for you guys? Could you talk about some potentialities or of how all those things could come together?
Sure, yeah. So on the share consolidation, I think that's something that that we are certainly looking at and talking to our lawyers about. It does have a few, it's got some work attached to it and some cost attached to it, and it has to be done sort of with the appropriate approvals, et cetera. So we are looking at doing it sort of at the appropriate time when it makes sense, which, I would hope would be in the reasonably near future. But we do get that question a lot, and we know 300 million shares outstanding is quite a bit. So certainly something that is on our radar that we're considering and will make happen when it makes sense. On the US listing or the uplist to the TSX, I think, we are very focused on growth at the moment, right? We've got to focus on the business. We've got to drive some of these pieces, these key pieces that we've talked about into fiscal 22. Obviously, uplisting or listing in the US is something that we will look at in the future as we grow, get a little bit bigger. And it takes obviously some work and some internally and some costs there's associated with that as well. So I think right now our focus is truly on these pieces around the growth over this next year or two, and we will look at that in due course when it is the right time for Martello.
All right. I'm going to say a whole bunch of different things here. There's a question here with when do you see your next acquisition happening, which obviously you can't sort of tell us what month it's going to go, but you're busy on the growth side. So it's probably at least in the second half of this year, or maybe even further back, I'm guessing. And I would guess where a lot of companies, for me to editorialize, often when they go NASDAQ and do a share consolidation, it's sort of a big package deal. You're like, okay, we're doing a big acquisition. We're going to raise a bunch of dough. We'll uplist. We'll roll the shares back, and boom, here is sort of the new Martello. Would that kind of make sense?
Yeah, I mean, that's kind of how we would see something like that happening, right? Like, we're not going to do a share consolidation probably on its own. That's just not typically the way you would go about doing that. It would be in association or in conjunction with some other type of transaction, or, potentially, I suppose, AGM, like whatever the case may be. But yeah.
All right. And just your next financials, because you have a March year end, and I think normally you do your Q4 in July-ish. I believe that's sort of the deadline for it. Yeah,
so we're looking at last week of June this year. So be out then, and then Q1 in late August.
All right. And some good questions here on the revenues and so forth. What is your net dollar retention rate? And another question is what's your average deal size today versus 12 months ago?
So yes, I've been staring at the net dollar retention rate question. So I mean, net dollar retention rate is not something, frankly, that we have put out to the market at this point in time. And what I will say about it, though, is when we look at the different areas of the business and we look at the overall retention rates, when we, factor in the fact, Mitel alone, we know that that's growing generally quarter over quarter from a usage perspective. So there's a, over 100% retention rate there. We do have the legacy business. So obviously the retention rates there are less than they are on the, the Microsoft product, DEM product lines. So we're seeing stronger retention rates there than we are in the legacy, as you would expect. And this is something that we are looking at. So I'll say we don't put that out to the market yet.
Okay. All right. And then, yeah, your average deal size, and I guess that's more specifically probably more on the Microsoft DEM side as opposed to the Mitel stuff. But can you address that in any way? Has it gotten bigger or smaller or?
Yeah, I would say with GSX, like after the acquisition of GSX, we certainly, the deal sizes for on the GSX side are generally speaking larger than they would have been on the IQ side previously. And they range really, I don't have an average number off the top of my head, but I would say they range from sort of, 20,000 to hundreds of thousands, right? Not that, and everywhere in between.
And that's per year. That would
yes, and yeah, sorry, annual, yeah.
And what is the ballpark or the list price or just per user? Every user is like $5 or $10 a month. You kind of quote it on maybe a base install price plus a per user fee, or kind of a thumbnail of what the user cost is.
Yeah, so on the Microsoft piece, I mean, it's in the range or just below $2 per user. As a standard sort of MSRP price, I would say.
Okay.
I think though that's I'd say generally speaking, we're looking at pricing, and as we integrate products and features and functionality, that will all change. So I hesitate sometimes to talk about that, because I think when you look at where we're going with Vantage DX and the integration of our products, and John talked about ANPAM and the network path monitoring tool, and as we add some of that functionality, obviously our pricing will adjust accordingly. So.
All right. We are about an hour into this. Now I'm running out of questions here personally, and I'm not seeing any here on the screen, and I apologize if I missed any. Is there anything you would like to address as we wrap this up? Any final thoughts or anything you want to sort of point people towards that hasn't been addressed to date?
Sure, I'll kick it off. And I see one last one, which is how long is the process for a Microsoft managed partner? The answer to that is as fast as I can physically get it done. One of the key things here is making Microsoft pay attention to us. As you can imagine, we're fairly small, but we are absolutely focused on that. So we are doing it as quickly. Even today, there was work with Microsoft on that. So it's really pushing. My aim is at some point in the next couple of quarters, and that's the target we've sort of put into the ground for the company to get that done. So and once we're there, then we expect there'll be a lag as Microsoft spin itself up. So again, you can sort of work out and saying, yeah, when will we see the first sort of revenues coming from that? We're at least 2 to 3 quarters away, but just getting that flag in the ground. The other thing is the Microsoft endorsement. Right? If you become a Microsoft managed partner, it's affecting Microsoft saying, this is good stuff, you should have it, right? Which is a pretty good place to be for somebody our size. So we're quite pleased by that. So I guess the other point is sort of reinforcing, I mean, a lot of the questions here about the future, we're keeping driving organic, the team's working really, really hard. And I think the other thing is, if I look at sort of the, you mentioned sort of Martin, integration, I'm really pleased with how well the company has performed despite COVID. We had one partner in Europe, and because of COVID, the wheels came off. They had to be acquired to stay alive. We've never had those problems. Yes, we took pay cuts. Everyone from the board down took pay cuts to keep the company, keep as many people going as possible. We've done all those pieces. So it's truly been, everybody's worked as hard as they can to drive this, and we've seen a lot of companies our size, where the wheels have come off because of the the challenges of being a small tech company in COVID. I mean, we talk about the bull market. You look at the companies that have gone up. A lot of them are very big, well-known IT firms. You know, we're not. So I think that's part of it, is saying, you know, we've done what we said we would. At the start of COVID, we said, if you look at any sort of, you know, economic uncertainty and challenges, the companies that come out strong are the ones that did offense and defense well, right? We did our offense. We acquired GSX, right? That was our offensive move. We did all those financial pieces during economic uncertainty of a pandemic that Erin talked about. And at the same time, we did our defensive posture. We cut costs within the company. We cut salaries. We've adjusted and focused. So I think we're poised. I think we're poised to come out of this really strongly. And now we're focused on saying, you know, we're hoping the market recognizes that, the share price picks up, and as somebody very rightly said, which gives me more space to do acquisitions. And that's what the focus is, get the message out. So, you know, I think if people are looking for that, please, you know, help us tell the story. We're grateful for the attention that you've given us, Martin, and all the people on the call, and the questions that went with it.
All right. Well, thank you very much. Thanks for taking the time to talk with us today. That's very informative. Have a great day, and we'll talk again soon.
Thanks, Martin, and thanks everyone.
Thank you.
Thanks everyone.
Thank you.